Hey, Happy New Year, everybody. Welcome to the Closing Beat. How you doing? Did you have a good New Year, Christmas, New Year's, all that stuff, whatever you did with the family and stuff? I hope it was good for you. We are financial advisors here at Jazz Wealth, back at it for 2024. I tried to think of like a real New Year's resolution, and I haven't really got one. I'll think of something. But while other advisors are playing checkers, we're playing chess here. We love the stats, right? You can see how stats have already played into the new year. Everything that I've shared with you last year and the years before, going into this year, already you can see it playing out. One stat I'll share with you here has to do with Roger Federer. Do you know that Roger Federer's name is 50% No, that's a good one. That's a good one. I like it. Cody's not amused. Anyways, let's talk about the stock market here. 2024 so far is not a continuation of 2023, although it's one day. Like, who really cares? Before we do that, should we do the leaderboard here just so in case Cody's got to go or something?
So you're, first leaderboard of the year. Very exciting. jazzwealth.com/guest to Dow. Your chance to win $100. We got James, Ryan, Andre, Joseph, and David. That's your top 5 to start the new year.
Those are all some new names, right?
Those are some new names and some clients on there too.
Hey, all right. Glad to see it there. You're welcome to play if you'd like. Start your new year off with $100 there, right? Okay, what do we have today? Exactly what we've been talking about, right? As you get to the end of the year, if the stock market is at highs, doing well, what is the incentive to sell? There is no incentive to sell, because that means if you have a gain, you got to pay capital gains, right? So what we see this morning here, here's a quick like heat map looky kind of a thing here. All the stocks that led the way were the ones that got sold today. And the more they got sold, the more they got sold, right? Because the pressure starts to build. You go, oh man, that was such a good profit. Now I have less. I wanted to sell anyways. Let me just go and sell. So the big names started doing it. Well, where's the money go? The dogs, right? So you could see here on the map, all of the bigger names, the bigger the box, the bigger weighting they have in the S&P, and then it breaks it down by category and sectors and industries. So you could see, well, the money must have went to some of these green areas: healthcare, energy, right? Consumer staples. You start looking at that. Oh, okay, that's pretty good. That kind of works in there. Some financials even if you work over there. What was that? Those were the 4 weakest sectors. Let's see if you can see that. If I go, today, healthcare, utilities, consumer staples, energy, I'll throw that in there as well. What were the weakest sectors down here over the last year? Utilities, staples, energy, healthcare, right? All right here at the bottom that really struggled going in through the last of the year there. Utilities was actually the worst, I believe. Yeah, so utilities ranks as the worst, minus 9% or so there. And so as we go into now the new year, the pressure to sell, right? We have that opportunity to do it. We can now delay the capital gain throughout the rest of this year and into the next couple of years, or next couple of months after that. Plenty of time, right? We have a chance to get some losses or do whatever. So if you've never seen that before, where that kind of happens going into the end of a year, congratulations. You've now seen it. You watched it in real time. All is there. Now, in our Notes from Jazz email, I did a real long one. I mean, it's all archived. You can see it if you're a client there. It's still there. Research members as well. But we talked about one thing that was really interesting. 50%, 50% of the S&P's gains for the year came from 5 stocks, not 7, but from 5 stocks there, right? And so you know what the names are. They're the big guys there. You know how that goes, right? I shared that slide with you there. So what does that put us into? It's a new year. Like, where does that go from here? Now, remember, the market is overbought. Let's do it this way. Let's go like this. Okay, so the average, so the average stock going into the end of the year was overbought, meaning 72% of all stocks in the S&P were overbought. Now, this is a technical discussion. So remember, you have technical analysis, fundamental analysis, you have the weird stuff where we use like solar systems and stuff, and you have a combination of both. So just briefly for a second, don't get disconnected from this. I'm going to talk about a technical position. In the S&P, 72% of stocks are overbought. Only 3 are oversold. We know that when the S&P has a large number of stocks that get overbought, you tend to see some profit taking. Pair that with the fact that we now have a new year and the ability to take profits without fear of paying taxes here in the short term. You now have a recipe for a market that can give you something of a pullback, right? Even if it's just a shallow one, we've already kind of got things started there. One thing to remember, this is overbought. This is not overvalued, right? That's where we're talking, you're talking fundamentals there. So if you ever hear somebody say that, if you're a beginner, you don't know what's going on here, overbought, if they ever say that, that's technical. That's just price. That's like when they look and say, oh, it's just too far. It's overbought. Price is too extended. The price of a car gets overbought. The housing market's overbought and due for some sort of pause or pullback. Well, when we talk about overvalued, that's talking about earnings. How much of a multiple are you paying for the right to participate in that company, right? I'm not saying the market is overvalued, just a touch, but not overvalued. It is overbought here in the short term. All right, that was a long explanation of that. Let's move on. You got the Dow here. Of course, well, hey, you can put this together as well. Let's just putting pieces together. So the Dow's the best performer here today. Okay, that's weird. At one point it was positive. The rest of the indices were negative. What can we get from that? Let's go here. Okay. We just talked about money moving out of the big leaders and into healthcare. The Dow is a price-weighted index, whereas the S&P is market cap weighted. So this chart is showing the bigger the box, the more weight it has. So if Apple had a really bad day, it's going to be hard for the market to have a bad day. If Apple, Microsoft, NVIDIA, Alphabet, Broadcom, Meta, throw in Amazon there as well, and maybe Tesla, right? If they had a bad day, the market almost can't go higher, okay? It's a little bit different when you look at the Dow. The Dow is price weighted. He who has the highest price has the most weighting. Who has the highest price? United Healthcare, $539. Goldman Sachs comes in second, right? 388. Let's check Caterpillar real quick. Yeah, Goldman Sachs comes in second. But anyways, so United Healthcare has the highest price. Therefore, if United Healthcare goes up, the Dow is going to have some underlying strength in there. Well, we know money was going into healthcare. So it didn't take much to get money to go into healthcare today, the lagging sector, which is also the largest stock in the Dow, which hopefully doesn't confuse you to death, caused the Dow to be the better performer. Still not great, but not as bad as everything else. Okay. Just putting pieces together. Gold down just a little bit here on the day. The Russell 2000 pulling back as well. There really wasn't any index that was fully spared from a pullback today, and that's okay. Bonds pulling back, rates going up, right? We've had a nice run in bonds. Interest rates are lower. In our notes from Jazz email this last weekend here, I talked about different categories of your wallet and how we're able to kind of see what's going on. And we talked about mortgage rates not likely going lower. Okay, so if you've been give you a hint there. If you've been looking to buy a house or trying to time the rates there, it's probably not going to get much better for you. Same thing, short-term, long-term, doesn't matter. A little bit of excitement, a handful of different ways that might affect the price of oil, earthquakes, planes crashing, and then, of course, the Red Sea and all this stuff. But not too big of a deal. It was a volatile day for oil, but other than that, not much else that you get too excited about. Okay, let's do a couple things here. I'm going to talk about, we'll go through some stocks. Then I'm going to give you like my 2024 themes, right? I'll try to go maybe a little different here, try something different. We'll do some stocks in the news and take your questions if you have any. I'm not big on looking back, right? The year's over. You can go find any data that you want, right? I don't need to tell you how things performed. It's interesting, but not really all that exciting. So what I wanted to do was look at the average performance of a stock in a sector. Okay, so give you a little bit of a inside track is what I'm thinking about here. Instead of saying this stock had a great year, will it continue or not? Let's look at where the momentum is on an average basis to see if maybe there's a faster way to identify where we might want to invest for the year. So in 2023, what we did is we said, let's take the top 1,000 stocks. This would be called the Russell 1000 if you want to look at it that way, instead of just focusing on the Dow or the S&P or whatever. Let's take them all. Let's get everything we can in there that sort of matters, and I hate saying it that way, but you get what I'm trying to say. So anyways, 20.5% gains. Now, what I want to do is I want to look at the average stock in each sector, not the performance of the sector, but the average stock. If there's something interesting, maybe then I can quickly go, I don't need to look at tech. I don't need to look here. It just helps simplify the whole sort of scan, I guess, if you will. All right, utilities, obviously the only one that's negative. The average stock in the utility sector was down 4.1%, which I find kind of interesting because remember, if you don't know, utilities has the highest yield of all sectors. So even with the dividend, you find yourself negative if on an average basis, right? Consumer staples, second to last place. Why? Less interesting. And still, this is the case. This is, of course, a recap, but consumer staples are less interesting right now, right? We supposedly have an economy that's growing at whatever pace you want to believe. Okay, soft landing, all this stuff. And what else? What's the most important thing? If you invest in consumer staples for less volatility and a higher yield, you could do better in bonds. You could do better in short-term notes, laddering notes, treasuries, whatever you want to do, money market accounts. You could do better. So I think that probably continues this year because we don't have a recipe for a lot of rate cuts. This bond market's still attractive unless there's a major pullback there. So thought that was kind of interesting. Materials, real estate, energy, and healthcare all underperformed on an average stock basis. So you have a bunch of stocks in there that even though the materials average stock gain is 13.2%, that's the average, right? So you better have been really, really good in that sector. It's kind of a tricky area to be. And then over here, your outperformers, communication services, financials, consumer discretionary. You know what those are, right? Like, you know, I have extra money to, not a consumer staple. Have we ever done a class on that? Industrials and then tech. So tech, literally doubling that of the average performance of all stocks, just to give you an idea how crazy it was, right? So when you look at something like that, now you could quickly come to tech and say, there's something going on here. We obviously know what it is, but there's something going on here. I want to look at a handful of names I'm interested in and just see if it's normal for performance to continue. Is this momentum that builds on itself, or is it overbought? Not overvalued. Well, probably overvalued too. So anyways, I thought that'd be pretty cool. Just something fun and fast to look at for you guys. Let us talk briefly about 2024 outlook. I just went nuts. You know, I was so bored. I had so much that I wanted to do. I said, well, I'm going to start doing all this stuff. So I said, well, how can I talk about like some ideas without getting in trouble by the SEC? Because I'm naming different stocks. You get in trouble for that. So I said, okay, let's talk about some different themes. Let's go with an obvious one. 2024, generative AI, okay? It's the hot button thing, I get it. But why is it such a hot button thing? And why do people say generative AI? Well, you know, our economy is measured by GDP, gross domestic product, right? We can't improve our GDP right now unless we improve the P, which is mostly usually referred to as product or production. We have to improve production, meaning we have to improve the output that an individual or a company can put out for the same or less cost. That's why they say generative AI. So the concept here is you do a job, and by using some form of AI, you can do your job better, or maybe you don't even need your job. But by doing that, the company became more productive, which added more to the gross national product, right? And so, or gross, there are two different numbers. But so that's the concept. That's why I think generative AI continues here. You see it spreading its little tentacles everywhere into different areas where we go, hey, we could actually use AI for this, and our employees could be 3 times more productive. Less or same or less cost to be more productive. We need that to see our economy really grow, because other than that, we just go out to bars and restaurants, right? All right, that's theme number 1. Number 2, a little less obvious, the private markets. Everybody and their mother is asking me, and I'm checking with other advisors too, and they're like, that's the hot area right now that's not being talked about. Private markets, both private equity and private debt or private credit, all right? So this is interesting now. I think it will become more of a discussion this year because insurance companies, you know, they have this money. They got to do something with this money, right? They collect a bunch of money from us. So they're starting to get into the private markets now. When that starts to happen, what happens? You have an elephant. Picture an elephant stepping into a bathtub of water. If we get into a bathtub of water, okay, you know, the water level goes up a little bit. Somebody's going to notice. If an elephant steps into a bathtub, the water level overflows and it becomes so obvious you can't ignore it. You've got to clean up this mess. that is one of those that I think is going to become more of a topic as we get through 2024. A fun one, the fat drugs. Oh, can you say that? Obesity drugs. There you go. You see what's going on there? You're getting more and more of the healthcare sector to work with not just like WW, but all these other companies as well, so that as they spread these, what have now become obesity drugs, out into the market, there's a profit to be had and everybody can enjoy the profit. Whether you agree or disagree with it is one thing, but I think that is something that continues in a big way. And if you look at the stocks that participate, they've already had good runs. I'm just saying, I think that continues there. And the last thing that I'll talk about, I think as a 2024 theme is, I didn't know how to word this, but the appearance of a manufacturing boom in the United States. And that's a bold one to say. And I use the word appearance because it won't actually be a manufacturing boom. It'll just look like it a little bit. You can figure this out in a statistical way by adding up all the 2024 CapEx of all the companies out there that are public that we can actually track there. If you add up all that, it's just over $600 billion. Now, if we as a country were to invest sort of uniformly, roads, construction, farming, industry, and all this stuff, if we were to do this with $600 billion, we'd get a lot done. The trouble is, that $600 billion, which is essentially all the money, not government related, but publicly, all the money that's going to be invested, you find that that's mostly electric vehicles, hydrogen, utilities, and semiconductors. So obviously semiconductors are important, but there's this little push, right, which will turn out to be a big sum of money that will make it look like manufacturing is back. And the reason that I say that is because it's an election year. So in an election year, what does the incumbent want to do? They want to say that they brought back the American jobs, right? Manufacturing, it's here. That, I think, brings itself up as well. So that was just a couple things, right? Not always going with the obvious stuff that you could, find anywhere. So hopefully you enjoyed that there. I will, if you have questions, feel free to pop those in there here. Let me get this going here. We'll do a couple stocks in the news. There's not a whole lot going on there. I do want to say that if you are a beginner or you have family, kids, whatever, and you're like, we got to teach them this stuff, but Dustin, what you talk about here is too advanced, email Haley at JazWealth or check us out at jazzwealth.com or go to her YouTube channel, which is linked to us as well. And you can actually see she's going through the basics step by step so that people who are just beginning don't feel overwhelmed and then, get glossy eyed and then we lose them forever, right? If you want to find a way to get them excited with a friendly voice, check out Haley there for those of you that are younger or if you want to get your kids involved there. A couple stocks in the news here. I'll take your questions. I rambled a little bit, but I've been gone a while, man. I've had a lot building up in my head I wanted to share. Alibaba, turns out their final purchase amount for last year was not repurchasing their shares. $9.5 billion. They said, you know what? We've got 11.7 billion left to go. It's not new news, but it is news today because they're committing to that. T-Mobile, this was the Barron's one over the weekend. They still did an article. I always point out what they say because they charge you for it. So if you're just curious, they got a pretty good track record too. T-Mobile says that Barron's says that this will be the cell company that gains more traction in the U.S. in 2024 as compared to the others. ASML, they're not based here. This is an ADR, but it's a popular semiconductor that a lot of people look at there. The Netherlands, this is where they're based. The Netherlands said, we're going to limit some of your exports to China. Kind of getting on the page of the U.S. there. ASML said that's not really going to affect us that much, but the damage had already been done. Hey, two more. What was the best performing stock of 2023? Since you can't see, I'm going to get ahead and just type it in here. There you go. Affirm. Best performing stock, 408%. A lot of it coming towards the end of the year there when we got into our shopping season. But nonetheless, that's your best performer there. Does that bother you? I looked at that and I'm like, hot damn. Yeah, good for them. There's a good run there, 408%. I hope everybody's happy with that. And then I thought about it and I'm like, they're doing that well. Buy now, pay later. this is what this is. Or if you're ever reading an analyst, the real geeky like Wall Street stuff, they just put BNPL. So if you ever wonder what that is, buy now, pay later. Anyways, that was your best performer. I'm not sure that I'm really excited about that being the best performer. I prefer it not to be something where it's buy now, pay later, because hope people have the money. And then AMC was your worst performer, down 85%, and that one I get. That's perfectly fine. Anyone who played the, YOLO Diamond Hands game there, you got yourself a tax write-off if you sold some last year. Love it. Okay, let's see if you have any questions. I'm happy to answer and see what I can do. Otherwise, I will get on out of here and get back to my day. Everybody woke up. First day of the new year, everybody woke up and said, you know what? I'm going to email Dustin. That's what I'm going to do. It was like, wow, okay. Kirk says, terrible time to buy a house. We talked about that. Yeah, some of the pricing in there in our Notes from Jazz email, because I didn't want to do a normal email that was like, yay, what a year, whatever. I wanted to go through buying a house. You're going to invest money, whatever it is that you're doing. You want to take on debt. You want to pay off debt, things like that. So it was good. The elections, we talked about that, the data behind all of that. Yeah, Chicago has such, when you talk about Chicago, Chicago's bad. I see the news sometimes. I don't really watch a lot of news, but that's a shame. I liked it years ago. It's been a while since I've been. They call it generative AI because it generates text or images, not because it generates anything else. That's not true, but it's partly true. Yes, it does generate something, but generative AI different than just AI like in a Tesla or the thing. Well, I guess that'd be generative too. The robot, the Optimus robot. So when you're using AI for information that then the system works on, like your auto driving in Tesla there, that's different. We're saying generative AI, we want it to actually generate production or I don't know if you would say a service, but you get what I'm saying. Like it would do something to increase productivity. There are a couple different types. Cade says, does equal weight outperform? If you're talking about the S&P 500, no, it doesn't. From time to time, it looks like it does, and it makes the news and everything. But over the long run, equal weight is a bit of a mirage in terms of outperformance from the weighted index, the standard index. Jin says, when do you know the right time to sell stocks? After a certain game, specific time, or something else? Well, there's a long answer to that one. But when you buy a stock, you should already know the target. And if you don't know what target you're shooting for, that's instantly tells me you're winging it. Because in anything else in life, you have a target and there's some risk amount you're willing to take. And sometimes it's the cost of the product, where, I'm going to buy this house and hope to flip it for so many dollars, and my risk is the house, right? Could burn down or something happens. So if you buy a stock, your risk is not the full cost of the stock, because that means you need that much to make a one-for-one profit. So most people would say, I'm going to buy this stock, and if it falls whatever, that will be one, right? So if it falls 10%, that's fine. I'm willing to take that loss. But if it goes up 10% and I sell it, then you see how quickly, if you did that for a business, you'd need to be accurate more than 50% of the time, a lot more than 50% of the time after costs and taxes and stuff like that. So most people would say, I want something that gives me a 3 or greater X return on my risk. So I'm willing to let it wiggle around 10%. I'll lose 10 if it goes bad, but I'm going to hold it for a 30% gain. I believe it can go up 30%, whatever your analysis tells you. So you always want to know ahead of time where you're going to sell it, because otherwise you can't measure the risk. There's no way around that. And some great classes in the dojo about that one as well. Yeah, I could talk about that one all day. I love that one. Think of it as like putting together a little plan, investment plan, a trading plan, whatever. You got a commercial? I can't tell when that happens. Sorry, I don't control that. Did you do that? No. I did not. No, yeah, so however it does that, we can't control when it goes there. I don't know what to tell you. MW says, you are wrong, ma'am. Generative AI is a type of AI that can produce content, including text, imagery, audio. Yeah, I'm with you. I 100% agree with you on that. But what are you doing with it? Are we just typing in like, show me a rabbit with, 3 nipples? I don't know. I don't know why that's the first thing I thought of. No. And actually, if you go back, I could probably find it. We actually polled every single company that in their earnings, which we used AI to generate, those that are using AI to increase productivity. And they broke it down by just using AI as an information source, which is like a Charles Schwab. So like AI for Charles Schwab is not generative, right? It's just information for their advisors. But those that are using it to generate productivity. Now, where we could be finding, I can't find it, where we could be disconnecting a little bit is I'm talking Wall Street and economy, and you're talking Google, right? It could be that, it's going to come up any second now. It could be that in Wall Street terms, we're only focused on the bottom line. Come on. Like, why would I use it at a company if it doesn't add any product? It doesn't add something to my bottom line. That's what I'm referring to. Sorry, I don't know. I don't have it in here. I'm down to slide 254. But I'll pull that back up for you so we can go over that. The number of companies and how they focused on it, because that was pretty interesting. And I think it's going to be a theme, I think either way, we're going to be talking about it here. Okay, and we got to get Eric to use like his own slides. I see a lot of Eric slides in here. Messing up my stuff. Oh, sorry. Where we got here? Guess the Dow. Yeah, we did. We did the leaderboard there thing for you. Do we not have a winner? There was a winner, right? Okay. So we'll announce it tomorrow, though, because we do have a winner. We just didn't do shows last week, so there wasn't there. But yeah, we'll do it. Sorry about that. Yeah, Victor, I'm sorry. You know what I mean? I don't know why I thought of that. I could have thought of anything else, but it's a live show, and these things happen. Oh, MW, come on. Now he's just messing with me. Okay, no worries. Let's see. That was officially, yeah, that's all I got. We did it. Okay, so we're back. We'll be here every day, of course, happy to help. We'll walk through the markets as they go, and hopefully we'll get some kind of a continuation of a pullback there. What? Oh, it's gonna be a Christmas outro thing too. There you go. All right, well, let's see what happens.